Has the gold market made a major low and finally turned higher? Perhaps moving back up to the highs of earlier this year and last year, moving above 2000 an ounce, maybe moving beyond that into levels that some people feel are more appropriate based on all the COVID stimulus and years of low interest rates. Each week, I track all the relevant data applicable to the gold and silver markets, analyze all the pricing and demand and the changes in that data, and make it available to you. Gold and silver cause a lot of confusion for individual and professional investors alike because they're so much different than stocks or real estate, and it can make forecasting and portfolio allocation that much more difficult. Without cash flow and dividends or even a growth rate, it's tough for investors to put a value on gold, like they would do with other assets. Gold's emotional. Honestly, it's an asset of last resort. It's bought when nothing else will do, but it can be a tremendous help within a portfolio at the right times. I'm Andrew McCormick. I'm the portfolio manager at Cottonwood Capital Management and the founder of goldsentiment.com. Let's take a look at the gold market for August 9th, 2022. The long-term fundamentals for gold are incredibly important to keep track of. As you can see, we maintain a liquidity index that over the long term really does explain a lot of gold's movement. Again, this is longer term. It's going to explain multi-year moves. And when we're talking about liquidity sloshing around the planet, we're not in a great situation right now. If you were to look at something like M1 or M2 here in the United States, we went dramatically above trend during COVID, and it looks like we're moving back to that multi-decade trend line, which isn't going to be terribly helpful for gold going forward, at least in the next year or two. As you can see, our liquidity index in green, plotted against gold. This is about a 2-year rate of change. It's turned over decisively, and it's driving lower pretty hard. And you can see that gold is mirroring that to a large degree. So, over a multi-year time frame, things are really going to need to turn around from a liquidity standpoint for gold to really perform well. Gold has been pretty weak. Maybe it can firm and just hold at this level. Maybe it can just consolidate and increase its volatility and chop around. But in terms of a really large sustained advance, it's going to be tough to do without liquidity really bottoming out and starting to boom. Liquidity, according to our index, will probably need to get back down to the levels that you can see in 2014, 2015, or even back in the early 90s. So we need to track this. I mean, it has made a pretty good move from its highs. It's halfway down there, back to the lows where it really needs to be to base and to get ready for another move higher. We're just not quite there yet, unfortunately. And I think we'll see that with the rhetoric coming out of the Fed when they're ready to ease. And they've made a pretty conscious effort to make to communicate in advance what their plans are. And so it'll likely be, we'll have a pretty good idea of changes to this green liquidity index before they happen, as they'll be conveyed by the Fed. But this is long term. Anything can happen in the short run. And so when we look at gold as an investable asset, it's tricky. There are a lot of different components that drive gold higher or lower. And one of them is the fact that gold is an asset of last resort. And often high levels of equity volatility or bond market volatility can drive investors into gold. Again, the market of last resort. And so here is our volatility index for the S&P 500 in yellow, plotted against the S&P 500 in green. And you can see that the yellow line is getting up to levels that have previously indicated rather high levels of volatility, lots of turbulence, lots of losses in the stock market for private and professional investors. We're not at extremely high levels yet, not like what we saw during COVID, certainly, or even the Great Recession of 2008, 2009, but back to levels of latter 2015 that saw a really nice rally in the gold and silver markets in the first half of 2016. And something like that could come about if stocks continue to stay down here or even turn lower and make a token new low. Couple that with some low sentiment, and you could get a nice rip back up to the highs in gold, should those conditions come together. But at this point, our stock volatility index is showing promise. I wouldn't say it's at a level that is, showing that investors are going to pile into gold, but we're getting there, and we're getting pretty darn close, to be honest. So we'll keep an eye on this, certainly in the weeks ahead. Lastly, from a shorter term standpoint, sentiment really drives gold over the course of days and weeks. It's about as good of an indicator or a model that you can have for the short-term fluctuations in gold. And so we maintain a gold sentiment index, which has really been helpful for many years. And, it's funny how sentiment can change so quickly in a market that's not driven by cash flows and growth. I mean, it really dictates nearly everything in the short term. The lows in gold over the previous few weeks saw a nice extreme bearish reading in our sentiment index. It was a nice buy signal for the setup. The funny thing is, gold hasn't advanced too much. I mean, it's made a nice rally for a swing trader or someone who's day trading. It's made a nice run up, but what's notable is the extent that the sentiment has really moved higher, disproportionately so than the price move higher in gold. So this makes me a little bit nervous in the short run for being an owner of gold or silver or any of the miners or royalty companies. I would be pretty nervous here at this point. The stock market's had a nice rally. A lot of the FANG stocks. There have been some meme stocks that have really moved higher as well. If things sort of get back to the trend of this whole year, which is risk off, with inflation being fought actively, gold is not necessarily an asset that you would want to hide out in, at least over the next few weeks, based on where sentiment is. Looks like investors have gotten really quite excited about the market. They've expressed that by buying it, and we've seen that in the price, and we've really seen it in the sentiment. So that's a little bit of a warning in the coming weeks, but we will aggressively be updating this and keeping an eye on where things are. So good luck to you this week. If you have any questions, feel free to reach out. We'll be doing an update next week, and we'll talk to you then.